And Michael, thank you for your patience. It's your turn, buddy. You're on deck with baseball season upon us. I'm now making you the presenter. It's been a while since we've talked. I'm looking forward to our conversation, Michael.
Hello.
Hi, Michael. How are you, buddy?
I'm doing great. How are you?
Good. How long's it been? And I'm waiting to see your screen. You know, you can share your screen here.
It feels, I think it's been about a year. Yeah, I'm just getting my screen up and loaded. Okay, show main screen. Which one is the main screen? I've got two screens.
Choose one. Okay, there you go. There's a spreadsheet up there.
Okay, yeah, no, that's not it.
We got hot chick up there.
Yeah, those are some meme ideas for today.
That used to be my only idea a long time ago.
Hey, you know, whatever. Oh, well, we all have things that get us going in the morning.
Yeah. So what got you going? It's been a year. Maybe you could refresh my memory, Michael, your journey into the business. What was your first gig in the biz?
Sure. So my first gig, I guess you could say, in the business was helping to run the New York City Investors Business Daily Meetup group. That was almost a decade ago at this point, like give or take.
Yeah. You know, IBD, it may be old school, but I think they're really the ones that really popularized knowing about relative strength and weakness. And it's something that I still use in my work today, trying to identify leadership and laggards. And by diagnosing that correctly, it gives me an edge to be shorting or buying the right one based upon performance. Are you still a big proponent of that?
Absolutely. I've been I've done some videos recently, stock A or stock B, and I've been posting those on Twitter and Instagram. And one of the comparisons yesterday was Johnson & Johnson versus Tandem diabetes care. I have those charts up. They're both in the healthcare space, but aside from that, like there's not too many other similarities among them. And you could even see like with the relative strength too, right? So relative strength, even from going back to December, you could see how Johnson & Johnson has been a laggard and kind of flattening out over here, even during its climb, while Tandem has been off to the races as far as relative strength. We're looking at weekly charts, and it's one of those things too where it just shows you like you want to be trading the leaders, or I should say that a viable strategy for traders that are looking for growth or momentum stocks want to be trading the leaders. And the easiest way to find leadership is to just take a look at the like what's beating the S&P 500 and making new all-time highs or new 52-week highs. And this is a great way to do it.
I wanted to ask you something else that is part of my theory and what I teach. Have you noticed when price and momentum confirms a new high, momentum's making a new high with price, that even if you get a correction, that markets rarely peak. You could get a high, but not the high, that markets rarely peak when momentum is confirming price, or bottom when momentum is confirming price.
Okay. I think I think it's more nuanced than that. Like when I'm looking at the market, when I'm looking at individual trades, I'm trying to spot the trend. I'm trying to look for consolidations. Let me blow up this chart over here on Tandem. I'm looking at so there was this spike up, right? Like so, like
Yeah.
this move here, you could call it, say, a cup with handle, right? Like there's the cup, and then maybe that's the handle, or maybe like this. Some traders might see that as the handle too. Either one of them work, and then it blasted off after earnings,
Okay,
right?
well, you know, I know it's your interview and not mine, but what I was talking about, like, look at the high in September on this
Look at the
particular
high
chart.
in September.
So before we move sideways and
Okay,
consolidate. So to me, that see, RSI was making a new high with that high. So,
right.
you know, I've renamed RSI from relative strength index to real simple implicator. So when a market's making a new high and RSI is confirming, to me, it implies that that's not the top. Okay, it could be a high, but the likelihood of another high is highly probable if momentum is confirming that move. And then as a trader, if I know I have confirmed highs or lows, um, I'm looking to buy a break after a confirmed high and looking to sell a rally after confirmed lows. Just that
That,
simple.
yeah, that's interesting. I haven't looked at it that way.
We
Well,
learn from everybody.
yeah, no, like that's one of the great things that I love about shows like this, and being on Twitter and StockTwits and Instagram and all these different places. I feel like there's so much that can be learned, uh, but I also think that it's a matter of us figuring out how to take these things that are out there and apply it to ourselves, to our own trading style, to our lifestyle. And I think that that's actually where a lot of traders get confused.
Okay.
That you could get overwhelmed by so much information, and it's like, oh, well, what works? Well, honestly, like most of it works. It's that not the system; it's the executioner.
That's
What
right.
are you going to be able to do?
It's who's
Well,
driving the car, right? It's not the car. It's who's behind the
yeah,
wheel. Yeah.
yeah,
Great point,
exactly.
Michael. So, you know, do you take into account as mainly an equity trader what's happening with the dollar? Does it, you know, that's our bailiwick here. Do you have certain groups that you favor during times of dollar strength that may be interest rate sensitive, et cetera, and times during dollar weakness? Does it come into play at all in your
Uh,
analysis?
and nope.
Okay, that's fine. And
Uh,
how about rates?
nope. Not really looking
Okay.
at that either. It's more so like, well, what I'm considering when I'm looking at market health, and all those things that you mentioned are important too. Like I coach other traders that trade forex, that trade crypto, that trade baseball cards. It's
Yeah.
like figuring out the handful of variables that are going to be important to that person, and figuring out, well, why are they important, and then sticking to a handful of variables and not introducing new variables into the process randomly. I think that if we start, well, like if say you convinced me that understanding the dollar and interest rates were super important and would help dramatically benefit my trading, then if I just did that once, then I would be doing myself a disservice because it's not a part of my process. But if I analyze my process and then I saw, you know what, this is something that I can apply universally in going forward, and then figuring out how can I work that in, then it makes more sense. But there's also a point too where you don't want to start taking on too many different variables. There's the study that was done back in the 70s that Adam Robinson quoted when he was on the Tim Ferriss show. And are you familiar with Adam Robinson?
No.
So Adam Robinson is right now he's a global macroeconomic advisor to some of the largest hedge funds. Some of his background includes being a chess grandmaster and coming up with the Princeton Review. He's one
Oh,
of the co-founders of the Princeton Review,
okay.
and so he's on Tim Ferriss's show. And the study from the 70s was they took a bunch of gamblers that would bet on horse racing, and they said, okay, with no information at all, how accurate can you be? And they ended up being accurate 10% of the time. So that's their baseline. After that, they said, okay, we're going to give you 5 pieces of information, any 5 pieces of information that you want. Somebody might want the height and weight of the jockey. Somebody might say, I don't care about that. Tell me the last couple of races that this horse run and what were the conditions, yada, yada.
Yeah.
And
Right.
so from there,
Then you get to a point of diminishing returns of information overload, and because I get it all the time, I get a lot of things thrown at me, so makes my head explode. How about you?
Yeah, exactly. And not only that, it adds to confirmation bias. So when they finally get to the end of the study, right? Like, so when they had the 5 pieces of information, their accuracy increased to 17%, right? So they're 70% accurate. 70% bump in accuracy. They thought that they would be right 19% of the time, right? So 17% accurate, 19% where they thought that they would be accurate. So pretty good calibration. As they got more and more things that so they were like any 10 pieces of information, any 20, any 40 pieces of information, their confidence skyrocketed, but their results flatlined at 17%. So the only thing that more information does beyond a certain number is feeding your own confirmation bias. And so I think that's an important part for us as traders to realize too. We don't need more information. We need to be able to deal with uncertainty and manage risk.
I completely agree. So what's your risk management style, Michael? When you go into a trade, first of all, you're trading equities. Do you actually use physical stop loss orders in equities?
Yes, I do. Actually, let me correct that. I do in when I'm trading outright stocks. If I'm using options, it's a little bit different.
Yeah, you can't. I was talking to a mentee of mine. I mean, how do you use a stop on an option when it's really, there's decay in there. There's all different types of variables, beta, theta. Kind of impossible to use a stop loss order in options, isn't it?
Yeah, it certainly adds quite a different dimension. Like you have regular equities that are sort of 2-dimensional, and then you have this 3-dimensional thing with options with, like it was saying, the time decay and the added volatility and all this. So when I'm trading options, and this is a strategy that I'd like to share that has worked very well for me. I'm trying to figure out ways to make it work on other time frames. But the time frame that I'm using, or let me start by saying, the intention of this strategy is for income generation.
Okay.
Every week or every 2 weeks, and this has worked out very well. It's not one of those things where, oh, you're guaranteed $5,000. Like, no, that's all nonsense. But this is a strategy that gives multiple ways to win, and the goal of it is income generation. So I'll look at a chart well, 10 might be a poor example because there's not really a good options market on it. But let me bring up Google, because this is one that I actually did this on this week. And so we have Google breaking out, right? So I see that Google is in this consolidation. It's starting to it's trending higher. So at the beginning of the week, I'm selling put credit spreads down here.
Okay.
That expire at the end of the week. So that
way, you're taking
advantage
of time decay, and you do it. Really, the decay the last couple of weeks is tremendous. So, what do you do if, say, for example, you're selling a credit spread, and say Google broke hard to 1060 during that time frame? What do? You just get out of the position, or do you roll, or what do you do to protect yourself? Because you're short something, right? You don't have limited risk on a credit spread, do you? You have unlimited risk.
Well, no, on a credit spread, your risk is limited.
Okay.
But so So here's what I like to do with it, right? And this is how I give myself multiple ways to win in the trade. And it's not foolproof, but it's something that adds even more potential to the potential win, right? So let's say it does roll over and roll over hard. What I do, since this is a daily time frame, I cover on that first break, right? Like I'll cover the short side of it and then I'll let the long side run, but I'm trading the long side of it on the 15-minute chart. Since it's breaking down on the higher time frame, I'm trading it on the shorter time frame, and I'm looking for, and I'm covering, and I'm looking to trade the pattern on that lower time frame, and then treat it as a day trade. So
Okay.
that's part one of making it potentially more profitable. That could end up generating a bigger loss, but you already know what your risk is going into the trade with the number of options and spreads that you put on.
Okay.
The second way,
Go ahead.
the second way that I reverse this, so like let's say it does break down, I'm doing that plus then I'm selling call credit spreads above resistance.
Okay. I see. All right. I have a more general question. We had that, the worst December, Michael, since 31, and we've had a 8-10 week rally, and it's been a tremendous rally. And I'm starting to get signals on a weekly basis if we don't recover of an outside week to the downside. What's your view of the position that the market's in right now? Is it possible that we correct half of this recent advance from the late December low? Are you getting any kind of readings or indications from things that you follow that say this market is long in the tooth and could set back here?
Well, I like to think that anything's possible, so it's best to prepare for anything.
Okay.
I think that where we hit resistance is a pretty logical point. So the way that I gauge the health of the market is by first looking at the major indexes, the NYSE, the Dow, the S&P 500, the Russell, and the NASDAQ. And I'll see what they're doing across time frames. So right now I have the weekly time frames up. And the NYSE broke out last week. It found resistance this week. Why could that be? To me, I believe that the indexes work in tandem with one another. And whoops, my screen just.
You know what I noticed here this week, Michael, and I want to see if you see it too. From the last big decline that we had late last year, and the Russell led it to the downside. The Russell bottomed first and led the recovery to the upside. And this week, it looks like the relative weakness between all the averages that you pay attention to, the Russell is a weakness. So, it's almost like a repeat of the same process. So do you consider the Russell kind of a leading indicator for the rest of the market? When it's showing relative weakness, that's a warning sign. And when it's showing relative strength, it means something completely the opposite? Compared to the other averages.
And it'll change. Sometimes the Russell's leading, sometimes the Dow's leading. I think that helps to me. When I'm doing so I'm starting at this top level analysis with the indexes. If I see that the Dow is leading the way and the Russell is lagging, then it's like, oh, maybe the bigger caps are doing something, and so they'll be more on the radar than the smaller caps that you would find in the Russell. When but it's just part of it. Another part of the analysis is what are the number of new highs versus new lows look like. So when that's what this indicator is down here. So if we look back to October of last year, we started to see the number of new highs, the green, start to really dry up, and maybe I can make that a bit bigger.
Oh yeah.
Yeah, so you see the number of new highs start to dry up as we started to come in, and then the number of new lows start to rapidly expand. And that's something that I've seen as a leading indicator, or just something as that would indicate that something could potentially change, right? When we started to rally up the bottom, look how dramatic the new lows just dried up.
Yeah.
Then we started to progressively see new highs start to come in. And to me, it makes a lot of sense. It makes sense that the market cannot continue to move higher if the stocks within it are not making new highs. Same thing if new lows.
I like this indicator. It's not early, but you know, it's maybe a little bit longer into the progression of the move, but the confirmations are excellent. New highs, new lows. You know, I'm hearing people talk about that. You know, is some of these breadth measures aren't as true as they used to be because of ETFs and other reasons. Do you, you know, the advanced decline line that people pay attention to, it's not the same advanced decline line we had before. I believe ETFs was a reason for not trusting it as much. Have you had any, do you have any thoughts on that?
Yeah, so I agree with the statement, and it's also why I think that there needs to be a third part of market health. And the third part of it is what's your watch list telling you? What are the stocks in your portfolio telling you? And I think that that's the most important part of it all.
Okay, Michael,
So,
why don't you take if you wanted to finish? I'm sorry I interrupted again. Go ahead.
no, that's okay.
You know, now would be a good time to show you have a great looking website. I've been there. You know, you coach, you write a newsletter, you mentor people. What would be the best way for people to get a hold of you besides your Twitter handle, which is your name?
Yeah, so they can find me on Twitter at Michael G. Lamothe. They could come to Mara Wealth. The website's up here, and it looks like I'm logged in. So let me log out.
What does Mara stand for?
So it's actually we got that name from my marathon running.
Oh, okay.
I see wealth as a journey.
Yeah, like
It's one of those things where we hit a wall. I've hit that wall in my own trading, and as a marathon runner, when I ran my first marathon, I hit the wall at I think it was mile 19 or mile 20 in New York City. It's right when you get into the Bronx, right? So imagine you're like running through the entire city, and you're in Manhattan, and there's millions of people out there, and people are cheering for you. I have my name on my shirt, so people are saying like, "Go, Mike!" as I'm running past, slapping hands with people. And then all of a sudden, you get out of the Manhattan, and you're into the Bronx, and the first thing you're greeted with is this steep bridge to get into the Bronx. And then after that, it's by comparison, it's almost a ghost town. Right, like where you have millions of people like on the side, then you have like maybe like 5 or 10 like kind of scattered around block to block, and you're spent at this point, and my legs would not move. And during my first marathon, like I actually started to like break down in the middle of the street and cry because I thought that like all this and I can't do it, like my legs just won't move. And
what a great story.
Yeah, and then thank you. After that, like I start yelling at myself. Like after a moment, I start yelling at myself, "No, keep going!" And then like somehow I will my legs to start moving again, and like I see that as the spot where a lot of traders get to. A lot of traders, they crack open these books, they try to apply it, and they get to this point where they're just hitting the wall, and they need help. They need help getting over the wall. And so, because I'm somebody that's learned how to trade part-time first, and going to the IBD meetups, and then becoming a leader there, and then getting to the point where I was finally able to leave the day job to come do this. And by this, I don't mean just being a full-time trader. I mean coaching
Teaching.
others. Like, that's the
Yeah.
passion, that's the fulfillment. Like I want to help them over that proverbial wall.
And let me ask you this, Mike. What a great story. Do you, because we both do this, do you feel even more satisfied with your students' victories than you do with your own?
Oh yeah, absolutely.
All right,
Absolutely.
I just wanted to make sure I wasn't crazy or anything. So, I mean,
Well,
seeing someone,
not for that reason.
and anyway, just seeing people that you teach, and have you experienced that the student becomes the teacher at times as well?
Always,
Oh
always.
man,
Every time when so I learned that early on. Well, when I first started doing the meetups, right?
yeah,
Like, to go back there, like, you're putting together these kinds of presentations, and you're doing a more thorough analysis because you're getting ready to present and share stuff with other people. So there's that pressure, and then you get the questions during and after the presentations, and it gives you different perspectives, different angles to see different things with. And I get that from presentations, from workshops that I'm doing now,
it
to
makes you
the one-on-one
accountable.
coaching calls too.
Yeah. I tell you what, Mike, what a great interview, and what a great story you about, and an analogy and metaphor of this being a marathon, because I'm still doing it after 40 years. And when I first started, a veteran pulled me aside and said, "Kid, this is a tough way to make an easy buck." And you know what? 40 years later, he was right, and I'm just starting to get good at it. Anyway, buddy, you're my trading warrior brother, and may any distance you choose to run, that you have the wind at your back for you and your students, that great trades just rain down on you and everyone that you work with. And thank you so much for coming and sharing with us today in F.A.C.E, Michael. It's been really a pleasure. Thank you, buddy.
Thank you. Quite a pleasure. Look forward to speaking with you again and tuning in soon.
All right. Michael Lamothe, why don't you give the website one more time? Mara, like marathon?
Yep, marawealth.com. There's a lot of great information on there, a lot of free goodies for people. Some of them are like this one down here, the Trader's Thought Box. That's a summary of the top 10 things that I've learned since starting on this journey 20 years ago. This trade tracker is the PDF that I fill out on every single trade. So it's a trading journal. I ask myself a series of questions ahead of every single trade just to get me into the right mindset.
Yeah, right.
And yeah, like things like, how do you feel right now? Right?
Yeah.
If you're not in the right state of mind when placing a trade, like if you're coming from a trade from a place of fear, anger, greed, like that how
You're
many
right, man.
decisions do you make from that kind of a place?
You're right. That's everything. So, there again, being a runner and being a trader, you're always do better in your peak performing state. If you're sick and you have a lot of things on your mind, the market will still be here and just step aside for a while. Do you agree with that?
Yeah, absolutely. There's always another bus coming.
I like that. So we'll wrap it with that, Michael, and thank you so much for being with us today. And I really enjoyed our conversation. Hope you did too. And yeah, that's a wrap for our show today, everybody. Good hunting. Remember, don't just count your pips, count your blessings. And just like Michael, everyone, good luck in running your race. Adios, and I'll see everyone tomorrow. You're welcome, Alina. And thanks once more, Michael. Good hunting, my trading warrior brother.
Thank you. You as well.
Thank you,
Have a
buddy.
great day.